Welcome back to the Dividend Diplomats YouTube channel. You're rolling with the one, the only, the Hurt Locker, Bert the Hurt over there, and you got your boy Lanny, the Dividend Diplomats, your favorite dividend investing channel, guys, and we're back with a brand new video.
That's right, everybody. But before we do, you know the drill by now. If you haven't already, subscribe to our channel below. Hit that thumbs up. Check out the swag store. Get yourself a Diplomat's coffee mug. Get yourself a Diplomat sticker, a t-shirt, a sweatshirt. Probably don't want a sweatshirt right now, though, because it's a little toasty. I think it's, 95 degrees today, Lanny? Is that what I'm seeing here in Cleveland?
I thought it hit 100 at one point today, my man. It was a steamer. It was the Cleveland steamer.
And you know what else are hot right now? Our dividend stock purchases. We're not cooling down despite the turbulence in the market. The S&P 500 may be fluctuating like crazy. It may have crazy up days and then some massive swing downwards because of inflation, because of rising interest rates, because of all the other economic headwinds. But during that time, we are still buying undervalued dividend stocks and growing our passive income.
Growing income, buying assets, buying more income for less is the name of the game. So guys, we're recording this right now on June 15th. So we're talking about purchases last week from the week of June 6th. So prices are going to seem a little bit higher, but don't worry. Again, we've been buying this week as well, but we're doing a recap of our last week's dividend stock purchases because whether the market's up or down, as Bert said, we're always buying assets. And what a great time to buy more income for less.
If you remember what happened during this week, the market was flat, it was up, it was down, and then Friday started the Hogan leg drop where the market tumbled, continued into the next week as well. So just keep that in mind as we went through. Market started its most recent nosedive on that Friday, June 10th. Lanny, kick it off here. Tell us about your first purchases throughout the week.
We're going to kick it off, but just as a frame of reference, yes, the Fed just increased 75 basis points. Yes, the market reacted very favorably to it. I think finished up, the S&P 500 was up about 1.5% today, trying to claw back to 3,800, far from their all-time high of 4,800. But the market reacted positively, and that's what this video is about, buying stocks. So what do? We bought. I kept my continuous purchases every Monday into Vanguard's high dividend yield ETF. So VYM, June 6th, my wife and I each bought 2 whopping shares of VYM. It's going to sound pretty steep. We bought them at $111.49 a piece, which is, very, very high.
I mean, that is steep considering the current price closed at the time of this video is $102.54.
Exactly. So $9 more. You can roughly say 9% higher than what it is right now. So we added right there was $12.40 at a yield of 278. But at the end of the week, we chipped in one more share as the market came down on Friday into my wife's account. Still $4 higher than where it's at now. But on Friday, June 10th, added one more share at $106.42. So in total, VYM, I think if you look at the numbers, about $552 and change invested into VYM, again, adding over $15 in forward income from that investment.
Boom. Tell us about your other weekly Vanguard, not weekly, I apologize, your daily Vanguard purchase while we're talking about the fund family.
And this kind of sticks true to what you should do, during volatile time periods. Keep buying the overall market if you're not sure where they're going. So as the market was continuing to be turbulent last week, if you recall the last couple of videos, I've kept it $50 a day into Vanguard's S&P 500 VOO. Kept it $50 a day automatic, didn't add anything more. Well, it was a little bit different this time. So instead of just $250 invested, I actually invested $320, so $70 more than normal. I believe I chipped in another 50 at the very end of the week, plus another 20 spread in throughout there. I added a whopping 0.85809 shares, almost a share, at an average price of $372.92. which again, to give you a frame of mind, frame of reference right now, it's trading at $348. So, call it $24, less than what I was buying them at an average yield of 1.49%, added $4.76 to my forward dividend income total.
Boom. Love it.
Swing
Consistency
it.
is
Let's
what
swing it to
matters.
you.
Let's come to our consistent purchases. Every Monday, we kick off the market with one share each of Johnson & Johnson. You know them, old reliable, the dividend king. They got their spinoff coming up. They're splitting it up, the company. Consumers here, pharmaceutical over here. It doesn't matter to them. How about that? It's going to be a great stock. The dividend's growing, facing some lawsuits. I don't care. Forget about it. My wife and I are getting to 100 shares each of Johnson & Johnson. We're going to match kind of what you were saying about VYM. We bought this at the beginning of the week at 177.05 for myself, 177.22 for my wife.
Ooh, beer.
Yeah. I did transparently. I forgot to set the automatic purchase at the beginning of the day, so I had to capture this later in the day. So put hers in first, mine followed. Sucks to be her. No, I'm kidding. In total, we added over $9 with $9.04 here. The yield on this purchase was 2.55%. We're getting into the high 70s now per share for Johnson & Johnson. So we're going to keep continuing this for at least 23 more weeks. We're chugging along here. We're on our journey to 100 shares of J and J each.
Bert, wait, what are they trading at right now?
Oh, just a hair under 170. They are at 169.99. So
nice. Well, I'm sure this week's dividend stock purchases were pretty nice, adding it at these prices.
Yes, they were. Get that smile on the face there. Bring the cost down so we can keep scooping up more. Lanny, why don't you talk to us about some of your other purchases during the week? Because you had a very interesting week in how you spread your money throughout the rest.
Well, again, you can't time the market, so still buying assets. And man, what prices have really shocked the system here. After I was getting pretty excited hearing all the Top Gun news, and I'm like, what? Let's add another share to Paramount. $30.80, 96 cents added in forward income, about one share, 3.12%. But again, after the sell-off this week, that stock price is extremely low at $25 and change right now. So luckily, I only put one share in. Same can be said about UPS. I was pretty big on UPS. Obviously, everybody saw the FedEx news where they juiced their dividend 53%. I know Bert put out a couple tweets, couple community comments out there. UPS increased their dividend 49% earlier this year. So I think FedEx was trying to one up.
Yeah, it makes sense. The shipping industry is increasing that dividend because think of how many times you're seeing FedEx and UPS driving around your neighborhood delivering all of these packages. They have been by far the biggest benefactor of this shift to online shopping.
I didn't have a big position into UPS. So, last Monday, I was like, yeah, I already put a trade in before the market opened. This is crazy, because they're in the 170s now, but I bought it at 188. So not a great price at all for me. But I added
the craziest thing I've heard there, Goose.
Oh man, look at that reference right there. Yeah. But yeah, so added $6.08, a yield of about $3.23 to my forward income.
I forget that their yield is always above 3. I forget UPS's yield is that much higher than FedEx's.
Yeah. I was following your lead here. I bought 4 shares of Intel. I bought them at the beginning of the week again, set it in there before I even went to bed Sunday night. So I think you'll have a good segue here, but I bought them at 43.53. At $174.10 spent, added $5.84 at a yield of 3.35%.
An excellent segue here, Lanny, because I can take the ball back here because my wife and I also added 2 shares of Intel during the week as well after their earnings call. Actually, you know what? I don't know if it was exactly earnings. They had some pretty negative news though about the outlook there for Intel, causing the price to fall. But you know what? We still love them long term. We grabbed 2 shares at the end of the week on the 10th at $39.50. So we definitely beat you there, but that also shows just how much Intel fell. You bought them on You bought them on June 6th, that Monday, Lanny. Your yield on Intel was 3.35%. We bought them that Friday below 40. That yield was 3.7%. It's incredible how much Intel fell throughout the week.
Intel, a legacy iconic company, a big cash flow machine. Bert, heck of a deal, man. Heck of a deal.
You can still get it as a deal because it's at 38.65. It's not a bad one to pick up 5 shares. Not a lot of money to invest there to grab 5 shares and keep increasing that at a nice dividend yield. So yeah, when we grabbed the two, just to close it up, we added $2.92 of forward income. We also nibbled on one more position that I've been slowly building for my wife's portfolio on Friday the 10th there. We had 1 share of Stanley Black & Decker. We grabbed it at 113.09. Yield's really rising on this one. We added $3.19 to this dividend king, growing that position. I think we're at 13 or 14 shares now. It keeps slowly increasing. In total, yeah, we grabbed we grabbed that yield. It was at 2.79%. You want to talk about another example here, Lanny, of a company whose stock price has plummeted since I've done that. It's probably time for us to grab another share of Stanley Black & Decker because at the time they closed at 106.56.
Oh, tell me you bought 1 share this week.
I have not bought one yet, but I probably will by tomorrow. So many of you, while the time you're watching this video, I'll probably at least grab 1 more share of SWK, maybe 2. We'll see how I'm feeling.
Nice job. I've been buying a small, segue back over to me. I've been buying a smaller financial services company really to close out my position because I wanted to get around 100 shares. So I bought another 10 shares of Jackson Financial. Average price was around $33.50. They're way below 30 now, I believe. Invested approximately $337. Ticker symbol is JXN on them. Again, stick with the big guns though right now. Dividend Aristocrats. Bert put out a great list on 5 Dividend Aristocrats over 4%. I added $22 in forward income. I add 100 shares. I'm pretty much, done here with that position. But, added $22 in forward dividend income at a yield of maybe 6.5% or so.
Love it. Get it to 100 shares. That's what you want. You hit your target. If you add it in the future, great. If not, you have a full position. This is actually going to be another funny segue here, Lanny, for my last purchase. This was my largest non-J&J purchase of the week. I really wanted to get one of my positions to 100 shares as well. And I actually exceeded it. I forgot that I added in this second purchase. This one's going to be funny because we now own 115 shares. I forgot when I put that tweet out over the weekend, I missed that second purchase. We now own 115 shares of Huntington Bank, ticker symbol HBAN.
You and your Ohio companies, man, you love them.
Yeah, get that Ohio portfolio going. On June 9th, we purchased it, 19 shares at $13.32. Cost basis $253.06. The next day on the 10th, that price came tumbling down. That's when we picked up the 15 shares for $12.44, adding another $186.60. In total, with this, we added $21.08. The yield on the first purchase was 4.65%. The yield on the second purchase, 4.98%.
Wow. And Bert, right now, Huntington is trading at, as I'm looking up the stock price, $12.54. So, wow, they're almost there. Yeah.
Did I catch the bottom?
You might have caught the bottom. Well, the bottom was probably earlier this week.
Yes, you're not joking about that.
Yeah, you could have caught him at like 11 and change, I think.
Yeah, it's what a wild market we're in. But again, hopefully everybody, what you're seeing, we're going to summarize them here briefly. What you're seeing is whether the market's up or the market's down. This is the benefit of consistently buying stocks and growing your income. We added Johnson to our positions in Johnson & Johnson, Stanley Black & Decker, Intel, and Huntington Bank during the week, investing $986.02, adding $36.20 in dividend income at an average yield of 3.67%. Lanny, summarize your purchases, my man.
Guys, in total across Vanguard's VYM ETF, the high dividend yield ETF, the Vanguard VOO S&P 500 ETF, Paramount, UPS, Intel, and Jackson Financial, we dropped, let me just check my formula here on the worksheet. Wow, $1,603.26, adding another $55.14 to my forward passive income total at a yield of 3.44%.
Yeah. So in total, Goose and I added nearly $2,600 in dividend stocks during the week. It was 25.89, 28 cents for the total, and the dividend income just under $100. We finished adding $91.34 combined of dividend income.
Guys, so what did you buy last week? What are you buying this week? I know you've already been commenting everything that you guys have been purchasing during the market downswing. I know we're all again going through all of the signs of a recession, with inflation over 8.6% right now, cost year over year up, the Fed dropping another 75 basis points. So expect to see that on all your lending rates out there. But in hindsight, you might see an increase in your savings account rate possibly coming up, maybe within the next month or two. Keep doing your best to earn money, save it, and invest it into income producing stocks.
Amen. If you haven't already subscribed to our channel, give this video that thumbs up, everybody. Let's freaking go.
As he said, that's Bertha Hurt and Lanny from the Dividend Diplomats, over and out.